And we're back with you, and we're going to take a look at the market action with a little help from Ted Seifried of Zaner Ag Hedge. And he joins us now from Chicago. What a day it has been. Ted, we were just talking a little bit ago about the lumber market and how crazy that market is right now. And we were at historic highs live here on the air just a moment ago. But these grain markets and livestock markets have their own unique attractions right now. Let's take a look here at this grain market activity. Of course, we had the export sales out this morning, but they really didn't have too much to talk about. Currently on the corn, they kind of stumbled out of the gate again this morning, and now they're regrouping where you have July corn now 6 cents higher. We're at 714.5 and inching their way closer to where we had that high overnight at 722.5. Now December corn is up 15.5 cents at 620.25. So they've narrowed up that spread now to where it's only about 95 cents. It had been about $1 wide earlier. And if you look at soybeans, and our quotes provided by bar chart show July now 20 3/4 higher at 15.63. So now we're 20 cents off of our low and getting back within about 4 to 5 cents of our high from last night. November soybeans now 18 higher. We're at $14.75. Yes, that's right. Over $14 on new crop November soybeans now. So here we go. Let's look at the wheat market in Chicago. We have that July contract. We had been sharply lower earlier. Now we're just down 2 3/4 at 741 3/4. So it's coming back. In Kansas City wheat, you have July now 2 higher. We're at 7.19 per bushel. Now we're a dime off of our earlier low, but still a little over a dime off of our high from last night. Now July spring wheat is trading 2.5 cents higher at 784.5 per bushel. And the cotton market has the July contract 249 points higher. It's trying to keep up, and it's at 89.82 cents per pound. It got as high as 89.99 within one little tick of 90 cents. Okay, Ted, the floor is yours. Let's talk about this a little bit. Everybody's in a bullish mood today. We have a WASDE report coming out next week. Is anybody going to throw any cold water on this market?
Yeah, okay, great question. First of all, you said the magic word earlier here today, Marlon, spreads, right? So what we've been watching very closely the last 2 days in the corn market is that old crop, new crop spread, with new crop giving up a whole lot of ground to, old crop giving up a whole lot of ground to new crop. The December corn contract really making some very significant gains here yesterday and today, up and over compared to what we're seeing in the May and the July or even the September. So what does that mean? Now, I think fundamentally there's some justifications for that. We saw a small cancellation to China yesterday. And when we look at export sales here today, they were not very impressive for either old crop or new crop. However, there's a lot of people that are getting very worried about what that new crop balance sheet might look like, because we're putting together our estimates for that WASDE report that you just mentioned. This will be the first time we see the USDA's new crop balance sheet on a WASDE report. We have seen baseline in the past, but this will be using the planting intentions numbers. It'll be using their trendline yield. We know that means production's coming down. So we're putting pencil to paper and realizing that that new crop carryover number on this report next week has the potential to be really rather tight, maybe even tighter than what we're seeing for this year. So that December corn playing catch up. However, what I will say is that this might be a little bit of a sign of caution. When you see a big flip in the spreads like that, a lot of times that can say, hey, we're getting to an upper extreme here, at least for the time being. So we're trying to kind of figure out, while there is fundamental justification for these spreads to be acting the way they have in the last 24 hours, the question really is, does this mean that we're kind of topping out here for the time being? Okay. And I'll say this, the expectations for this report next week for both corn and soybeans are going to be really rather bullish. If for some reason the USDA disappoints, well, that could put a near-term top into this market as well. Yeah. But for right now, a lot of strength across the board, just like you said.
Yeah, everybody's kind of concerned about maybe opening one way and closing another way after the report. So, yeah, we'll watch that. We'll come back and take a look at this livestock trade here, Ted, see what's going on there when we come back. On the livestock side, it looks like everything is lower today. We go back to Ted Seifried. Ted, what is the deal? How come?
You know, we saw export sales this morning, and they weren't really, really good. I mean, I think for pork, they were very solid, and China was in 15,000 metric tons. That's good to see. But I think we've gotten to the point in a rally where we really want to see really bullish numbers to make us keep going higher, right? So just a little bit of a breather here in the hogs. I don't think this is a high, or I don't think this is going to be a big reversal here today. I think we're just kind of taking a little bit of steam out of the hot and heavy market that we've been in. For cattle, I'm going to say export sales were a bit disappointing. I'm also going to say that, the chart is at a level where it's been trying to hold this support here for the past 2 weeks. We've had a nice bounce off of it, kind of, like we see yesterday, but we're not able to extend those gains and get back in or on our way up back towards those highs. So you have to watch cattle really closely here today for a reversal lower and breaking that key support, which would be yesterday's low. If we get through that, that's signaling that we have another leg lower coming on this move. I don't think fundamentally that's necessarily justified. I think the way the cash cattle is really trading very sideways, we should continue to trade cattle very sideways. But it is at risk here for rolling over to the downside and having that downside breakdown.
Well, that's a great point. Let's look at where we are in the futures right now. We'll go to live cattle here first, and our quotes from bar chart show the June contract down 57 cents at 113.85, but we had a high this morning at 115.50. So it turned around from the open. August now 60 lower at 117.12 per hundredweight. On the feeder cattle market today, you have the May down 167, August down 167, September down $1.92 now at 145.55. And on lean hogs, you currently have the May contract down 25 cents, but look at June, down $1.27 at 113.15 after making a new contract high at 115 even early this morning. Ted, thanks for the time. Ted Seifried of Zaner Ag Hedge with us here. Janet, back to you.